Good morning, traders. It is 8:01 a.m. from Chicago. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is very bullish this morning. We're starting out with the DAX running up almost 1% at 125.5 points. The Euro stocks also in the lead, up 0.73%. Up 26 points, followed by the Russell, the Nasdaq, the Dow, and so on. The laggard this morning is the Euro, trading at 117.38, down 12 pips. Everything else is green. Everything else is up on the day. So definitely allocating to risk this morning. That's where the market is putting its money. In what is likely to what is driving us here. Um, It's hard to say. We're pushing. We've been consolidating for several days now. We've had another balancing day yesterday. A lot of fuel there between yesterday and Friday, and we're busting out of there and pushing higher in an uptrend overnight. Yellen is resigning from the Fed, and the S&P 500 is finishing 2018 near its highest estimate, the most bullish estimate from Wall Street firms at 2950. This is what's expected. The market is currently very bullish on the S&P 500, on the large caps, and so on. So not too much to report there. Of course, you have your own access to the news feed. Yesterday, couldn't do the Trader Byte, had some issues, and so I had to pass. But to go over the weeklies today, there's not too much on deck. We've had several releases from the UK. We're looking for existing home sales at 10 a.m. Eastern. 10 a.m. Eastern. Existing home sales for October, expecting 5.4. We're expecting Fed Speaker Yellen to speak at 6 p.m. this evening Eastern. 6 p.m. Eastern. We're looking for ECB Speaker Kerr to speak at 10 a.m. Eastern. So again, ECB Speaker Kerr at 10 a.m. Eastern, and Yellen speaking at 6 p.m. Eastern. And then for the rest of the week, tomorrow we get durable goods, University of Michigan FOMC minutes. The Eurozone gets consumer confidence, and ECB's Villeroy. Thursday, I want to remind you that we do close early on Thursday. We close at 12 on Thursday in U.S. markets, 12 o'clock Central, 1 Eastern, and on Friday, I will not be here Thursday, and then on Friday, we close at 12:15. I will also not be here on Friday either. It is a holiday weekend here in the U.S. There's still releases coming out of Europe Thursday and Friday. Friday especially gets a German IFO, but most U.S. markets are shut down, and it's likely to be a very quiet trade. Remember, on those days, if you are clearing with a U.S. firm, make sure you're aware of what your emergency numbers are and keep your account number handy in case you decide to trade. This way you can get yourself out if you're stuck in a position. As far as what we expected yesterday, like I said yesterday, I could not do a Trader Bite, but I want to go over what I posted. This is what I posted on Twitter. This is the overnight, and yesterday the market dropped hard in the overnight session, as you see here. It started basing. It based pretty well, and then started to run up through the midpoint and was pushing towards a key area, 2080.50, 2080 and a half. And we spent a lot of the time during the day at this price. Actually, this is a key price. If you recall, I've been talking about 2080.50 for a bit of time now. That's how the overnight looked, which led us into the hypotheses. So if we look at hang on. The first hypothesis is this, that the market's it was likely to make a minor attempt lower and then is likely to turn around and push higher into the 2584, 2585 area to rest and end up around the 2580.50 area for the rest of the day. This is again a 2-day balance area and is likely to get a lot of action. That was the primary hypothesis or scenario. Secondary scenario, we push up early, fail to continue to push through the prior day's high, and we get failure down to test the low of the prior day and hold steady in the middle. Again, tight range. And then the third scenario is that the market is just not able to hold on to these prices and it starts to move towards the gap. There's the gap mid right there, 25.72.75, and any drop lower would target that gap mid. That's the gap we left behind from last Thursday. Okay, those are the three scenarios that we were planning on. And then here's what the market actually did. Let me get my opening swings corrected. All right. So this is what actually happened. The market basically traded sideways. It did not make a very clear push down, but what we got yesterday is just a market that's just sat sideways in that 25.80.50s. You can see that this is the 25.80.50. Lots of tests here, and it finally breaks through and comes back, retests again, and it ends up trading there again in the afternoon. We didn't accomplish very much yesterday other than to consolidate quite a bit yesterday. A very balanced profile with a lot of with a fair amount of volume going off. We are currently, so we went vertical overnight. We're currently trading way up here at 25.91.50. And then we have the all-time high just above at 93.50. So we're within close range to the all-time high. That's what happened yesterday. The overnight session. Here's what we've got. Very quiet. Well, a little bit of selling on the Asian session, held sideways, and then Europe opens and off to the races we go again. I told you that the DAX was just ripping up this morning, 127 points or almost 1%, pushing higher, and it has taken the rest of the structure with it across the globe. The CAC 40, for example, is up 0.73%. The FTSE's up 0.26. It's a laggard. This morning, it just dragged everything up with it. And that's what we have. We have a market that is in a strong uptrend in the overnight session. The volume is okay. It's about twice what we would consider to be normal or the most common volume for the overnight session. So there's a fair amount of participation. I expect that the market is likely to continue to participate. The overnight inventory is about 60% or so long. The imbalance is long, okay, to the upside. And we have pretty decent participation in the delta as far as aggressor volume on the buy side. It's pretty good. Expecting a bit of a rotation down on the open. So that brings us back to what are we expecting on the open? Let's clean this up. So here's the point of control from yesterday, 25.80, 25.80 and a half. And then what we're going to do is extend that forward, given yesterday's action. Extend it forward. Drops to 25.80 and it goes up to 25.81.50 because of the amount of volume that went off at the point of control yesterday, and that's where we are. So we have this new area that we need to pay attention to right here. This right here is our new area that we expect support at. I'm looking for any push into this area. I'm looking to buy it on the first test, pretty aggressive. And then failure beneath there would take us down into the 25.81 area. So I expect some pretty good support in that area, in my opinion. Again, trade your own plan, but that's what I'm looking at. As far as what we're expecting this morning, I'm expecting the market to revert back just a bit. I expect us to leave a gap zone up here, but I expect the market to dip back into the range. This will help the market gain the energy it needs to start rotating back up and through the high. Look for an impulse higher into the overnight high, take out the overnight high, and then start to attack that grind through that all-time high. And this is a day session high. The night session, the overnight session is 94.50, but that's not a true high in my opinion because it did not have the equities underlying the stock trading at that point. It was just the ES trading in sympathy. So the 94.50 is the all-time high in all sessions, but the day session high, the pit session high, is 93.50. I'm expecting us to grind through on our way to 25.98 as the next key figure above. That is scenario number one. This is classic, right? So we've seen this multiple times where we gap up, like right here. We gap up and we just fiddle around a little bit and then we start to go in the direction of the trend. Okay, and so that's how things are shaping up on the primary hypothesis. How far does this drop? Right? So how far does this drop here? I don't know. It's the market. Remember, the market auctions down to find those buyers. It's really just pushing down to find buyers, and I don't know where those buyers are. That's what I call in webinar 3 on my website. That's what I call the third force or the unknown force. We don't know when that force is going to participate, and it's infinite, potentially infinite, right? The money that's sitting on the side that has not been put into the market, we cannot measure. We're not able to measure that. We don't know what it is. We can only see what your charts only show you the money that's been committed or the positions that have been committed to the market. And so we're looking for the market to test lower, but I don't know how low it'll test before participants start to get greedy enough to step in and buy it to support it. Generally, I look for the half gap. So if you take the gap zone from yesterday and figure out the half gap is about the area that, depending on where we open, is about the area that I would expect support. That's the area I generally lean against, but lately it's just hasn't even gotten to the half gap. It gets pretty aggressive earlier than that. That's your primary hypothesis. If we open and push higher and hold steady, then expect a continued grind today and expect it to get to that 98 pretty relatively easy. That's hypo 2. That's the second most likely scenario. The tertiary scenario, the third scenario, is if we push higher and we just poke through that all-time high and we hold steady and we start to see the delta start to roll over where participants are just not lifting the offer anymore and they're hitting the bid. And now we're looking at something a little more exciting. We're looking for an impulse down into this micro composite, and in that situation you're targeting 85. I'm targeting 85 and definitely the MC point of control 81.50. We have not seen this in a while. We haven't seen a market that opens in a gap and actually does what it, believe it or not, that's the normal behavior. The normal behavior of the market, or the expected general behavior of the market on a gap up, is to be responsive, to recheck the auction, come back to around the point of control the prior day or the point of control of the region of the MC, to then base and then continue higher. But this market is on steroids, is on crack or something, and it just hasn't done that. It doesn't flush out the week longs before it continues higher. It rewards the weak longs. Like I saw this back in when I first started trading, my first year of trading, 1999, 2000, into the March 2000 top in the Nasdaq. I saw similar behavior, and also in 2007, in May of 2007, where it just rewards, the market just continuously rewarded the weak longs until it didn't anymore, and then you just had a quick cascade drop during that time. I'm not predicting that. I'm just saying these are the conditions that we're in, and we can only trade the conditions that are in front of us. Okay, those are the three key scenarios here. Um, I don't have very much time to cover the Russell, but the Russell has been interesting in that it has been getting participation to the long side. Remember, the Russell's been in this kind of a bull flag pattern. Let's back this up. Bull flag pattern for a while, and has been having a hard time holding on to higher prices. Not so lately. The Russell has been in an upward channel lately with no problems. And it seems to have dipped deep enough. Remember, last week I was looking for a test of 2450 and 2440 as the areas that I'm anticipating the market to base from for the next leg up, and the next leg up is likely to take us to 2498 even, back in this region here from down here. But what it's done is it's dipped deep enough to find aggressive buyers, and it's pushing single directional in that direction, and it's coming back to this high volume area. So what we have to watch out for in the Russell is right here, this cutoff right here at 1500. We're trading at 1511 this morning in a gap up. The Russell's in the upper distribution. It is setting up to make new highs. So the Russell looks like it might dip a little bit and then make a push for the high as well. The Russell is now back in line with everybody else, whereas the Russell was lagging for a long time. I mean, while the ES, if you look at the chart of the ES, it's done this, and the Russell has done nothing but sell off. So the small caps have been showing weakness for a while, which was interesting to me, but it seems to be taking that back. I'll keep my Russell comments to that. The last thing I want to bring up to you before you leave is make sure you're doing something every day to win the day. So what must you do today to win the day, right? So it's really important as a trader when you come in that you're doing something on a daily basis that gets you closer towards your goal, towards something. So what is it that you're after today? What is the goal? Yes, the goal is always to come in and make money and so on, control our risk. But what are you doing today to get you closer to your long-term goals? What are you shooting for? What error are you eliminating today? What thing are you practicing today? Um, and in a very focused way to make sure that you're getting closer to your goal. This is a really important factor that you have to kind of come in every day and ask yourself, what must I do today to win the day? And it may be the same thing every day until you master it. It takes a long time to change our behavior. And so make sure when you're trading that you are aiming for something that is going to win you the day. Okay? So I want to remind you of that. I created this slide, and I'm going to keep reminding you of that fact, that you need to come out every day and overcome something. Otherwise, you're just stagnating, you're losing money, you're wasting money and time, precious time, and you're not moving yourself forward. Good luck today. Take care.